Welcome to The Way to Build Wealth. I'm Ethan Block, and I'm helping you build wealth. Welcome to the show. I'm surrounded by books. That means today is going to be a fabulous day. We're talking about index funds, and I'm diving right in with an amazing quote, probably one of my favorite quotes in this entire book, Stocks for the Long Run by Jeremy Siegel. Towards the end of the book, check this out. Most of us have no chance of being as good as the average in any pursuit that others practice for hours to hone their skills. Anyone, however, can be as good as the average investor in the stock market with no practice at all. How is that possible? Let me put that in my own words as well. So basically, think about it. Think about how hard it is to be as good as the average in maybe football or basketball. I mean, I've played basketball and practiced basketball a ton, and I still suck. Think about sports or hobbies or professions. Think about how many hours go into it just to be as good as the average. In the stock market, you can be as good as the average today with no practice at all and not really knowing much more than a couple of the tidbits that I share with you. And that is tremendously powerful. And the way you do that is through index funds. So what exactly is an index fund? I'm going to use a pure definition, and then I'm going to put that in my own words. So Wikipedia defines index funds as collective investment schemes, usually a mutual fund or an exchange-traded fund, that aims to replicate the movements of an index of a specific financial market, or through a set of rules of ownership that are held constant regardless of market conditions. So what does that mean? It basically means an index fund is like a mutual fund, except it has rules that govern it, and the fund sticks by those rules no matter what happens in the market. You see, with a traditional mutual fund, the world of mutual funds, I think there's something like 8,000 of them, and most of them underperform the market. It's a story for a whole other day. There's actually people, suits, that actively manage that fund and are trying to actively outperform the market. You see, with an index fund, there's a set of rules, and that's it. There's no managers, there's no active management. There's rules on the fund, and the fund follows those rules, and that's it. You take that whole aspect of people out of the equation. Now, for all intents and purposes, we should narrow the world of index funds down to really just two main, or not two, that's my mistake. You want to narrow the world of index funds down to broad-based index funds, meaning index funds that hold a crap ton of securities. For example, the S&P 500 or S&P 500 index funds is an index fund that is based off the S&P 500. The S&P 500 is comprised of the 500 largest corporations, or most of the 500 largest corporations in America. So by buying an S&P 500 index fund, you instantly own 500 of America's largest corporations, which taken as a collection is about 80% of the entire stock market value. That's incredible. You almost own the entire market. Now you can take it one step further and go with the total stock market index fund, which effectively you own pretty much all publicly traded securities in America. The Dow Jones Wilshire 5000 is the actual index, and the 5,000 stands for the amount of companies comprising that index, and you can find index funds that track that index. By owning a broad-based stock market index fund like the S&P 500 or the total stock market index fund, you instantly guarantee yourself the average return of the market. You see how it all comes together? Because you own everything, you're going to do as good as average before fees and taxes. Now I'm going to get into fees and taxes in 1 second. But by knowing nothing at all and buying one of these funds and owning all of these securities, you will do better than 50% of all other investors in those markets. That's how it works. Think about it. If that's average, 50% do better, 50% have to do worse, except for the intelligent people that don't want to compete with Wall Street and buy index funds and passively manage their money. It's super, super powerful We will, in future episodes, talk about how you can start to branch out and buy individual stocks and the analysis that goes into that. But for most people, building wealth through index funds is one of the main ways, or one of the only ways, they should be investing in stocks. It is, like I keep saying, extremely powerful. Furthermore, index funds are extremely low cost. A regular mutual fund that's actively managed, because there's all these people actively managing it and they're all giddy about it, they charge obnoxious fees. Index funds, because there's no managers, have extremely low fees. It's awesome. Going on top of that, index funds are also extremely tax efficient because they're not constantly turning over stocks, right? They're following an index. And whenever the index changes, they'll make their adjustments in their stock funds. But other than that, they're not making any adjustments, meaning you're not going to be paying taxes on all these, gains and stuff like that all throughout the year. They're extremely tax efficient, and that's also tremendous. I mean, through the fees and taxes alone, you will consistently outperform the average mutual fund. It's awesome, awesomely incredible. I know this is a lot. I'm almost getting through this. I have one more major piece to get into about index funds, broad-based index funds, which is what we've been talking about, like the S&P 500 index fund or total stock market index fund. When you own one of these index funds, you don't need to ever feel unconfident in your investment in these funds. It's not like when you hold a mutual fund and let's say the mutual fund tanks, you start questioning the management of the actively managed mutual fund. Are these guys, you're thinking to yourself, do these guys know what they're doing? Are they making the right decisions? But when you own like a total stock market index fund and the market goes down, you don't think to yourself, oh, these guys managing it right. You own everything. As we talked about before, as long as world economic growth continues, stock price appreciation will continue. So the more confident you become in this, the more comfortable, when the market goes down as it has over the past 12 months, you use those opportunities to buy slices of corporations at discount prices. This is awesome. I said awesome too many times this episode, but that is really awesome. So I think that's it. I'm going to end with a quote from The Intelligent Investor by Ben Graham. By the way, I reviewed this book as well. I'm going to link it up down there. It's the Little Book of Common Sense Investing by John C. Bogle, who is the founder of the Vanguard Group. Oh, that reminds me. This is a long episode. Forgive me. It's awesome that you're sticking through this because I'm blasting knowledge at you crazy today. Along with this episode, I made 2 web pages, or I like to call them sheets, that basically break out the total stock market and S&P 500 index fund offerings from what I believe to be are the 3 best brokerages for index funds. That's Vanguard, Fidelity, and Charles Schwab. And they're linked up down there. If you're not on the Way to Build Wealth, come to thewaytobuildwealth.org, find this video, and they're linked up right underneath of me. And these sheets are great. I've done this legwork for you. I wish I had these sheets when I started investing. So I'm going to wrap it up with a quote from Benjamin Graham's Intelligent Investor. To achieve satisfactory investment results is easier than most people realize, i.e. through an index fund. You feel me? Most people don't realize that it's that easy to guarantee yourself average returns. Sorry, I kind of cut the quote in half. To achieve superior results is harder than it looks. And in that respect, that's finding individual common stock issues that you can hold to outperform the market, which is much more difficult than people realize. But we're going to be getting into that in another episode a little bit further down the road. I'm Ethan Block, and I'm helping you build wealth.